Why am I going to put my personal job on the line when I can't see in black and white that you have the capacity, the character as a CEO of your business? When you are in a high season, you need to retain some of your cash and apply for a loan. You don't apply for a loan when you need money. If you do, you can get approved, but oftentimes because of the desperation, you're in survival mode, you're trying to put out a fire, the rate and the term will be so much higher. So that's like a low doc loan, but it's low doc because they can look at the value of the property. They can look at, the comparisons and say, okay, hey, for this home, they should be able to rent this home out for $3,000 a month. So yes, I can give you a loan where the payment is $2,200 a month because I can see already that you should still be able to service the debt with the $3,000 that this property can generate. You can pretty much put anything almost within a 7A loan. So that means working capital, that can be equipment purchases, that can be adding to your staff. It can also be commercial real estate. It can be a line of credit for a government contract. There are just like literally almost any type of capital that you may need can fit under that A umbrella.
This is the Commercial Builders Network, where trust is restored, power is reclaimed, and legacy is built. Let's get to work. Hello, beautiful people, and welcome to another episode of the Commercial Builders Network. My name is TaNeshia Reed. I'm your host, and today we have the beautiful, the great Ivy Hall. She is the Vice President of SBA Lending with Total Bank. How are you doing today, Ivy?
Hey, TaNeshia, I'm super excited. I'm feeling great. It's the holidays, and I'm ready to bring some gifts of knowledge to your audience. So thank you for inviting me.
Thank you. Thank you for being here. Can you please introduce yourself? Tell us, what are you known for?
Absolutely. So I am Ivy the Great. That's technically what I go by, professionally and personally as well. But essentially, I'm a banker. I've been in banking and lending and finance for over 18 years now. I'm almost at that 20-year mark. So I've seen, different economic turns. I've seen a lot of stuff, a lot of changes in the industry. And essentially, what I've been doing since that time is a couple of things. I've managed branches, I've managed lending departments, I've helped to build out lending programs. I've also been, between the bank side, but also on the CDFI side, which is a community development financial institution. I've managed a credit union as well. And for the past 10 years, I've been exclusively working with small business owners, real estate investors, people who are really interested in commercial real estate or taking their business to the next level and helping them to gain access to capital.
So what gave you the passion to help entrepreneurs, especially people that look like you, get access to real capital?
Oh my gosh, that's a great question. So I'll say two things. I'll start off with a funny story. So any banker that you talk to, they will likely tell you that they're an accidental banker. That's what I am. I'm an accidental banker. When I went to college, I actually majored in marketing and journalism. And I was a news reporter for a brief period of time, like less than a year. But the market I was in was not very profitable. And so I have a brother who did major in business, and he was working for a very well-known bank, Wells Fargo. And I remember he gave me a call one day. He said, hey, because I was like, I think I'm going to, try to make a transition. And he said, hey, why don't you apply to work at the bank? I was like, the bank? Are you sure? And, I always remember this story because he's like, yeah, he was like, it's this other young lady who's working up here. He's like, if she can do it, I know you can do it. He was like, you'll be great. So that's how I got into banking. I applied for the job. I got it. It was an entry-level position. And within less than 2 years, I was a branch manager. All of that came from leadership, sales, again, knowing how to do audits, knowing how to manage the banks, the office's financials, and also like just training people and things like that. Now, on the other side is the fact that my father's an entrepreneur, my grandfather's an entrepreneur, my brother, who was a banker, is now an entrepreneur. And so just that entrepreneurial spirit was always in my family. Now, to maybe add an additional layer to that, yes, I understand the heart and the vision of an entrepreneur personally, is just to say that when you're in the branch, when you're working, you're working with people face to face, day in and day out, you begin to slightly notice the disparities between who can really get approved for credit, who can't get approved for credit, who can get approved for larger amounts of credit, and where those gaps are. So immediately, within my first couple of years of banking, lots of things became apparent. And the one thing that was really apparent was that there's a huge gap in accessing capital, just for people of color, women, new business owners, first generation immigrants, things of that nature. So sometimes there is that gap and just really understanding how does this algorithm, we love to say the word algorithm. Banking is also an algorithm. And so you really have to know how to work it. And so I just really fell in love with providing people with the opportunity to, number one, set themselves up for success because the banks have lots of money, they love lending money. That's how they make money. And so
Mhm.
it's all a game, but you have to know how to play the game and really helping people to understand how to be more strategic. It's not just putting in an application. It's not just saying, hey, I need funding. There are several other layers to it that in order to have a successful funding round or a successful application process that I want people to know. And I've been able to share that knowledge with hundreds of people.
I love that. I love that you have, I guess the thought behind legacy is already inside of your family where you have this thought of ownership inside of your family. And I know that in your bio I saw that you said I'm just not funding loans, I'm unlocking ownership. What does that mean to you?
Ooh, that's such a good question. Yeah. Um, you know, Sometimes you have to think about it. Sometimes people just want access to capital, and that's great. I'm great at that. There's no issue with that. But with all of the clients that I'm working with, and when I'm speaking to audiences, I'm really trying to help them also see a bigger picture. And what does that bigger picture look like? When you're a small business owner or you're a developer, sometimes you're just focused on your main thing. You want to get your project completed, you want to gain access to funding so you can grow and scale, but you're more so in your business. You're managing your business. But sometimes you miss that aerial view that comes from just observing things at a higher level. And so, what I'm doing is really trying to help business owners, developers, people in the real estate game is to see, hey, it's more than just a fix and flip. It's more than just getting funding to do this next thing. What you want to do is number one, ownership in the neighborhoods that you serve. But this is America. This is the country we're born in. And this is a country that is built on ownership and assets. You know,
Absolutely.
there's a lot that can always be said about race, but really when you look at it, it's even more so about class. And how can you increase your class is through ownership, through assets. And so, really trying to help reframe the thought. Yes, it's great to have a side hustle. It's great to be making money, all those things. But with the money, what are you doing with it? It has to be strategically leveraged because that ownership helps to create legacy as well as generational wealth.
Awesome. Generational wealth is essential. What does that mean for you when it comes to legacy building and I guess establishing in our community something that isn't we speak about generically. I had a conversation with a broker recently. He was like, "Yeah, there's families who have been planning this out for hundreds of years. And we are always starting from the ground floor in many cases. Not gonna say always the case, but in a lot of cases, we're starting from the ground floor. How do we change that? How do we turn that around?
Yeah. You know, Number one is having the understanding that particularly if you have family, if you're a mother, but even if you don't necessarily have children, you probably have a niece, a nephew, a cousin, maybe your best friend has a child. And so understanding that we cannot continue to, I don't want to say this, but it just is what it is. We can't continue to complain about what systems are already in place.
Hmm.
I'm very big on what we need to do is learn how to play the game and then play it at the highest level. So for me, creating generational wealth, number one, begins to say, okay, how do I understand how does money work? How is legacy created? Digesting each of those pieces and then taking action. Because we can watch a great podcast, we can watch the Commercial Builders Network, we can gain all of the gems, you can watch all the things, but if you also don't take action, then what are you doing? So with
Absolutely.
two things, you have to have the knowledge. Number one, really, you have to have the desire. So I'll start there. You have to have a desire to change what's going on in your bloodline. You have to have a desire to change your kid's future. It's not
Mhm.
just college. It's not just, oh, well, my child's going into tech. They're going to be fine.
Yeah.
Absolutely not. You have to be talking to your kids about budgeting. You have to be talking to like right now. I am a mother, and I'm a divorced mom, so I'm a provider. I'm a mother, but I'm already me and my daughter. We talk about stock. She loves Chipotle, so I talked to her about, hey, did you know that we can be buying stock in Chipotle? And like as much as you like
Mm.
to go to Chipotle, why don't you just own some pieces of Chipotle?
I love
And
that.
talking to her about what you want to do is you want to look at the trends. You want to try to buy at an entry level. And the hope is that the stock goes up. Just really, I think when we talk about changing the narrative, changing the dynamic, it's understanding that I'll say it like this. For me, parenting is about taking all the good my parents gave me and then adding on everything I wish they would have told me. That's what changing the narrative looks like. What are the lessons that I had to learn the hard way? Whether it be student loan debt, credit card debt, whatever the case may be, money management, having a true budget, giving every dollar a job. Okay, some of those conversations weren't had in my household. So
Mhm.
now that I'm a parent, in order for me to empower my child and make sure, again, we have to make sure that our community understands we have to be competing at a global level. Okay. We're competing at a global, yes, we live in America, but people are coming into our country, which is totally fine, but they're coming in with skills. They're coming in with money management skills. They're coming in with credentials. So they're having the opportunity to leverage better jobs, higher paying jobs, a clean credit slate because they're just now coming over here to America, which makes it easier for them to buy a home, buy a car, and all of those things. So we need to make sure that we're cleaning that slate off at some point in time. Again, whether it's your child, your niece, your nephew, your best friend's daughter, your goddaughter, whatever the case may be. And even sometimes talking to our parents. Like, sometimes some of our parents are depending on us to help take care of them. And if that is truly the case, we need to be having that conversation now. We need to be
Absolutely.
understanding what is the savings plan? Does that parent own a home? I had a friend that recently, a colleague per se, but her mother passed. Very, very sad situation. And I remember she posted on Facebook, she said, she's about to pack her mom's apartment up. That broke my heart even more than her losing her mother.
Mhm.
You have to go in, pack up an apartment, probably an apartment that she lived in for some time. All those memories are gone. There's no real estate being transferred. The only thing you have are her, physical belongings, like
Right.
pots, pans, and clothes. I hate to say it like that, but that is
Yeah,
the truth.
that's
And what we
true.
have to start understanding is that we don't need to be handing down a Gucci bag, all of these frivolous things. What we need to be handing down is trust, life insurance, making sure our children have a plan. I
Yeah.
talk to my children about accountability. One day I will not be here. I'm telling my daughter that now at the age of 11. She's like, "What? No, I want you to understand. I'm not going to be here. And when I leave, you're going to have, you're going to be blessed. Like, you're going to miss me, but you're getting
Mhm.
a check. But
Yeah.
also, I have to make sure that you know how to manage that." And
Yeah.
so having those conversations, and then also, of course, in certain communities, nobody wants to talk about life insurance. Nobody wants to talk about the end of life process. We really have to start demystifying that we are born in this world and we will die. That's just that on that. Like even Jesus died. Okay, like what are we talking about? So
Okay.
we have to start just come on. We have
Yeah.
to start being real. None of us will be exempt from that process. And so if we think about that, what are the
Mhm.
things we need to put in place now? I don't care if it's a term life insurance. It doesn't have to be this IUL. It can be a term life insurance, but that term life insurance can change your child's life. It can change your grandchild's life. And so thinking about things like that, having plans in place. And I like what your friend said. Some family, when you're creating a legacy, you have to get out of survival mode. And
Mhm.
when you're in survival mode, you're living day to day, paycheck to paycheck, month to month. it's so hard for you to actually start to conceptualize the future, not
Yeah.
only your family's future, but your personal future. Now, remember, okay, we're all going to pass away someday. So what do I even want? Like I was literally thinking last night, like, honestly, at my funeral, I'm totally okay with being cremated. I know that may sound a little bit morbid, but like, you all can
Mhm.
cremate me, drink some champagne, eat some caviar, and call it a day. Like,
Yeah.
it's not that serious. Like, have a good meal, play some good songs, dance, but I have to think about that. And what do I even want my end of life to look like? And preparing the people around me, having it documented. People who are creating legacy, they've written things down. It's not just in their mind. It's not just on a podcast. It's not just on a phone conversation with a friend because we're having drinks and yeah, and it feels good and you get that dopamine hit. The dopamine hit should really come in when you're taking action. So I'll stop right there because I know I went on a little rant. I'm gonna
Well,
stop.
Imma let you know you did a commercial for me.
That's
You did a
true.
commercial. I am, outside of the podcast, I am an insurance broker. I do succession planning, and I'm trying to feed your spirit right now with good information to help boost your business and boost your confidence and know that it's not just about right now. It's not just about if you've been down and out. It's not just about if it got tough. How do we pick ourselves up and keep pushing so that we can actually build our legacy and build for our family? So I start with the podcast, but I come back with
I love it.
a classroom where I actually educate
I love
on
it.
the succession planning and how do we leave a legacy for our families. And at the very least, because people just assume that their kids want their business that they work so hard for. And in our community, most of our businesses die with us. At the very least, make sure your family gets what the business is worth.
There you go.
And,
Like, I mean, and it's not just our community. Like, I'm seeing it. I'm in SBA lending. I do a lot of business acquisitions. I'm talking to all types of clients. Their son is in
mm,
tech. Their daughter lives in California. They have a business in some other state. And nobody necessarily has the desire to run dad's business. Okay,
right.
so what does that mean? Has the business been evaluated? Have we started talking to brokers about, okay,
Hmm.
how can we sell this? Because selling a business is also a part of a retirement plan. It's
Absolutely.
also succession planning. And I want to say this part right here. In certain communities, I don't want to just, but there's been trauma, right?
Hmm.
And this thing of, well, I figured it out, so
You got to
you
figure
have
it
to
out.
figure it out.
Boy.
We have to stop that. You know, it even happens, and I hate to, some of these things are tough conversations, but it even happens in situations like sexual abuse or, kids being physically abused or not having what they need. And, or, well, my parents spanked me, so I'm gonna spank you. Like, okay, and I turned out fine. It's like, but did you? Like, I don't know. Did you? I don't know. You're not giving me emotional intelligence right
Intelligence.
now. Like, that's
All
that's
right.
not what I'm picking up in your spirit.
Mm-hmm.
So those are the things nobody should be wanting. And I mean, like, nieces, nephews, I get it. Many women are not having children, and I also totally support that. So don't think I'm just saying no, but still in your community, your mom, your dad, your uncle, your nieces, your you still know somebody that's in the next generation. How can you help them? And we have to get out of this thing where I suffered, so
Did you?
it's okay. You can suffer and
Oh,
you'll be okay. That has to end. That
absolutely.
really, like, if that's one thing I want us to stop doing, that's where it has to end. Okay, your grandmother died. She didn't have insurance. You all, I don't know, did a fish fry, whatever you did
Always
to
fish
lay
fry.
grandmama to rest.
Right.
But and so now you're just not going to have insurance? Like,
Mm-hmm.
don't you remember how frustrating that process was? Don't
Yeah.
you remember how frustrating it was burying your father and there was no plan, there was no paperwork, there was nothing? Maybe there
Mm-hmm.
was just some old insurance policy that maybe you looked up and found, but there was
Yeah.
nothing that we have to stop that.
Mm-hmm.
That's what real it's not. And I mean, even people who have successful businesses, I talk to them about this all the time. I've been in banking. So I've seen people have successful businesses. They have hundreds of thousands of dollars in their account. I don't always know why, unless they're paying payroll and stuff like that. But they have hundreds of thousands of dollars in their account, even if it's $50,000. They don't even have a pay on demand. Like, you can a paid on death. You can have a POD on your account. If there's no POD on your account when you die, again, it's not generational.
Yeah.
Generational means it's transferable. Ownership means it's transferable. So unless you own something and unless you're thinking about it in a generational wealth, that can be the dollars in your account or your physical residence, but you still have to make sure it's transferable. Other than that, like, what are we talking about? That's my New
Mhm.
York accent. I have like this New York accent that sometimes, what are we talking
Talking
about?
about.
Like, what are we talking about? It's got to be documented, and we have to start really thinking about the future. And so some of that comes with a regulated nervous system. Some of that comes with truly figuring out, what do I need to do to get out of survival mode? Sometimes
Mm.
that means you need to gain a skill. Like, honestly, people don't even understand. Becoming a licensed insurance agent, that's like a 40-hour class. You take a test. It's not that hard. Same thing for
Yeah.
many, many things. There are skills that we can gain that don't require a college loan, a student loan, or anything like that,
Yeah.
where we can increase our skills so we can increase our income so we can get out of survival mode and then start planning. But if you stay, and I'm, again, not trying to be mean, this is no judgment, but a $20 job, a $20 hour job, a $30 hour job, that unless your cost of living is extremely low, it's going
Mhm.
to be extremely difficult for you to
Absolutely.
really climb your way out of survival mode. My dad has always been an entrepreneur. Like, he's been at
Mhm.
every game, but my dad has always been an entrepreneur. He's had his ups and downs,
Of
but like
course.
maybe for the last 20, 30 years, like he's been on a great run. But all of that came from just skills,
Yeah.
applying himself, redoing his certifications, and honestly saying, okay, hey, I have children and I'm going to do what it takes to make sure if my kids call me, I
Mhm.
got them. Like, my dad's
Yeah.
talking to me all the time, like, hey, I'm gonna set this up for your kids. I'm doing this for your brother's kids. It's like
Yes.
that, those are the conversations we're having all the time.
And see, I'm trying to have these conversations with my family, but y I don't know, they like YouTube better and go find it off of Instagram, and it sounds like and I'm like, "But I've been telling you this for years."
You
But
know, Imma say this, now I'm now gonna bring a Bible scripture up, and I'm not, but, it said one man waters and somebody else plants, but, so but what people do need to understand is that when somebody in your family is taking their time, their breath, and their energy to drop nuggets of wisdom in your life, why would you not listen to that person that, number 1, shares some form of DNA, but number 2, they likely have your best interest at heart.
facts.
What we try to do is we try to say, oh, you're a licensed insurance agent or you sell real estate. Well, I don't want you to make any commission off
Of
me.
me.
Somebody's going to make the money. Somebody's going to make the money. So, again, what are we talking about? I'm gonna try not to say it too many times, but like, what are we talking about? You don't
Yeah.
want your cousin to make commission off your real estate transaction or your life insurance policy, but that cousin is going to probably make sure that you actually understand your policy and that you don't get screwed and that it's affordable and it's not something that you pay for and then in a year or two it lapses.
Yeah.
Those are the things. Again, it comes back from that thing of, well, I suffered. And so you can suffer. Or
Mhm.
you I mean, honestly, people have to understand commission is paid from an organization. It's not even really directly paid from
From
your
you.
pocket. So
Mhm.
please, especially when we're talking to life insurance agents, I really do mean it's like your family, anybody's family. When somebody is talking to you about how to set yourself up, your family up for success, via life insurance. You have to listen. Like, it's not, nobody's trying to scam you. Many legacies have been created simply from life insurance.
Absolutely. And it also has built out a lot of banks too. A
I mean,
lot of
like,
banks.
lots of banks, lots of families. I mean, it's a way for people to pay off debt. I watched this reel one time, and a young lady basically said that her father, who was a Caucasian, who was grandfather, somebody was a Caucasian man, but he was able to buy a house for maybe $50,000, 60, 80 years ago. The
Mhm.
house eventually became worth like $1 million. We'll just say that. He also had life insurance. He also was able to go to school, get skills and things like that, which helped him to do the things that he needed to do. But again, a house that he bought for $50,000 is now worth $1 million. And because he had a plan, a piece of that went to all of his grandchildren. And what she really spoke about was like, this help, I couldn't be where I am had
Mhm.
he not had these things in place. She's been able to
Yes.
pay off student loan debt, put a down payment on her own house, pay off other high interest rate credit card debt. And so those are the things we have to start thinking about. Between
Absolutely.
life insurance and real estate, the only other thing you should be doing is figuring out how do you invest in the stock market. Like those are the three biggest things. You can definitely create a business. You can create something to generate money. But after you generate money, in order for it to be generational, it has to be transferable and it has to be tied to one of those things: life insurance, real estate, or the stock market. That's the algorithm. And like we can't keep fighting against the algorithm. We can't keep doing that because the only
Mhm.
thing we're doing is, as they, I'm from the South, and so they have this saying, they say, you cut your nose off to smite your face. Like, it doesn't make sense. If we know
Yeah.
that this is the game that is being played and we're seeing other people eat our breakfast for lunch and or dinner, why are we still sitting here refusing to enter into these different markets?
Mm, that's good. And before we switch gears, I'm just going to say for anybody out there that has any questions, send a message to me. If you have a felony, 'cause sometimes people can't get covered with certain felonies. And if there's somebody with real health concerns, there is a workaround. So don't feel
There are.
defeated. So let me know. But the biggest thing I guess most people are going to say, and this is why we need you, I don't have the capital to do all of this stuff. How do I approach a person that is a lender? What conversation should I have when I first come to you to get prepared to build my legacy, to start my business and get the proper funding?
Yeah, I'm gonna say this first. Number one, did don't take your ego, your pride out of it. That's number one. Especially if you put in an application and you're unsure, or if you were to put in an application and you would be unsure if you were to be approved, you're not confident, then just don't worry about your ego. You need to come with an open mind. So that's number one. Number two, in order to gain access to funding, it's really what we're really looking at is cash flow. So yes, you can have a business. Your business can be generating revenue, but is your business generating a strong net profit? Okay. Net profit means that after you've had a $50,000 month, what did it cost you to get to that $50,000 month? Did it cost you $45,000? Because at that point, your profit is only
It's
5K.
about
So we have to start thinking about that. Lots of times I see people saying, "Oh, I had this kind of month, 10K month, whatever." That's great. But what did you spend in ads? What did you have to spend on the products? All of these things. What did you have to pay your staff? If you have a brick and mortar, we have to start, honestly, we have to look at the numbers. And what I found is that many people, as long as they can just kind of keep things going,
mhm.
and put out a fire. Okay, I can put out this fire. If they can keep doing that, sometimes they're okay. But really, to gain access to funding that's at a great rate, a great term, you're going to have to really get into your numbers and understand your business and your cash flow. Cash flow is just simply how is money coming in and how is it going out? What's coming in? Do you have an abundance of cash to take care of your obligations? Or sometimes is your cash coming in sporadically? If it's coming in sporadically, that's going to predict a negative cash flow because you're going to still have some overhead costs that will be there regardless. If you have strong cash flow, of course, that's a positive cash flow. But we have to start understanding, how is money even moving into my business? Then also, what costs are associated with that? And here's the thing, how can we drill down and be more lean? You always want to, as a business owner, you are a CEO. You're the CEO of your life. You're the CEO of your business. You're not just a business owner. So you have to put on that CEO hat. A CEO is looking at net profit. What costs can we drive down? You know, people are they're always upset when they go to Walmart and they have to, pay at those the
Self checkout.
the self checkout, right?
Mhm.
Why did Walmart do that? They're doing that to keep their costs what? Low.
Low.
If their
Mhm.
costs are low, their net revenue, their net profit is higher. That means that they
Mhm.
can pay more to their shareholders. That means that their stock prices can increase. So those are the things, regardless of whether you like it or not. What are some of the things that we can do? And then also, you know, I really want to charge business owners to understand you have to know the difference between if you just have an expensive hobby or are you really driving yourself to be that CEO? When you're driving yourself to be that CEO, you're making the cuts that are necessary. You're monitoring all the costs. It's not just, can I pay it? Okay, maybe you can. That's great. But how
Mhm.
can you drive those costs down strategically? And then also, how can you leverage your cash flow strategically? When we talk about getting approved for funding, here's what I've seen many times. I see business owners, developers, they make great money, but they also spend that money. So that means that their cash flow and their liquidity, oftentimes it gets depleted because they're making money, they're spending money, they're making money, they're spending money. So they're not having the opportunity to retain the money. And then sometimes what happens is as the money starts to dwindle down, it's like, oh, let me apply for a
Off
working
another.
capital loan.
Mhm.
What we need to start doing is, as a CEO of your business, when you are in a high season, you need to retain some of your cash and apply for a loan. You don't apply for
Mm.
a loan when you need money. If you do, you can get approved, but oftentimes because of the desperation, you're in survival mode, you're trying to put out a fire, the rate and the term will be so much higher to where it's
Mm.
like, you almost end up regretting it. Like, did you get access to the capital? Yeah, you did. But now you have a high interest rate. They're called MCA accounts. So they're merchant check cash advances. So for people who have like e-commerce businesses or they have a lot of electronic purchases, whatever payment platform they're using, whether it be Swipe or PayPal, PayPal may say, okay, you getting $50,000 in this account every month. So let me offer you $30,000.
Mhm.
Okay, they offer you the $30,000. Like, wow, they offer me $30,000. Let me take it. Well, you have to pay attention to what those terms are. Because with some MCA accounts, they lend you the $30,000, but you don't conceptualize that, okay, well, now you're paying them $2,000 back every week. Like those MCA accounts can be where some businesses you know, are laid to rest. So with the MCA accounts, what we have to keep in mind is that, or any loan, this is any loan. This can be if you're just, somebody who you're taking out a personal loan or a business loan, or if you're a developer, they do, they call them private equity. That's the dressed up name. Okay. But private equity is also, it has another name. It's called hard money. And they
Mhm.
call it hard money because when it's due, it's due. And oftentimes you have to understand what are the terms. Okay, if I have a hard money loan for a fix and flip, am I going to be able to get it completed within a time frame and then also sell the property within whatever that term is so that I can pay the private equity loan off and then go off with the profits. Same way with MCA, but with the MCAs, they have aggressive payment schedules. So again, yes, you had access to the 30,000 but then now you're paying 50,000 back or six like the interest rates are incredibly high and the payment plan is very very aggressive. And so now it affects your cash flow even more because now you have an additional bill that's coming out and normally they're like weekly or biweekly payments. Rarely are they monthly payments on MCA accounts. And so just understanding just because somebody offers you money doesn't mean that you need to take it. But
Mhm.
that comes with understanding your numbers. And again, when your business is doing well and it's extremely profitable, when you're in a peak season, that's a great time for you to start exploring lending. Now, I also have my startup people. You know, I want to be very direct with my brand new startup individuals. Okay. Now I have another friend. He lives in California. He always says individuals. Okay, but anyway, I want to just have a word with you all for a moment because people are like, oh, do you do funding for startup? Many banks and lenders, like right now, because of where the market is, everybody is not really lending towards a startup. But here are some of the things that you can do that will help you. You can still start your business. You can self fund to a certain extent to really begin to create that traction to show, hey, I've created a product or a service that people do desire. Here are my sales because your sales, all of that is your data. So you
Mhm.
can't say, I need funding to start the business. You kind of have to take some of those blind steps of faith, start the business, collect the data, start creating a track record. So then you can say, hey, I am only 6 months into this, but look at what I've done. I already have this many clients. I've done this many sales. Here's my profit. Here's my revenue. That way you can start demonstrating your ability to pay the loan back. That's really the biggest piece of it. What is the demonstration? What's the cash flow that shows you can pay the loan back? And the other thing, if you have a startup, or if you're considering a startup, everybody was kind of mad at Tabitha when she said, hey, keep your job. But I can tell you as a lender, if you have some additional income, yeah, keep that additional income, because it's additional income that makes you look more stable on paper.
Absolutely.
And then create some type of succession plan or transition plan. But just jumping out there and you're only depending on this one thing, and then guess what? What happens is you get the loan, but then sometimes you have to use the loan for your personal
Personal bills.
expenses.
Mhm.
Okay, it does happen. We know.
Yeah,
Okay.
uh-huh.
And
Now,
so we have to keep that in mind. Go ahead.
so it's funny you say that because, with keeping your job, I always tell people that the lender wants to know that you can pay the money back. So, like, again, with that extra source of income, it shows, hey, if this don't work out, there is a source of income that can actually help contribute to paying back the loan, so that it actually is helpful and useful for
Yeah.
that.
And there's a term for it. I'll give you the acronym and then I'll tell you the term. So and I'm sure you're familiar because you work in real estate, but it's DSCR. It's your
Mhm.
debt service coverage ratio.
Yeah.
The debt has to be serviced. What is the debt? The debt is the loan. The debt has to be serviced. What is the debt going to be serviced with? Either the profits from your business, so that's your regular debt service ratio, or if you're in real estate, they still call it DSCR, because guess what? The building or the home or the property that you purchase, they can look at that property and say, hey, for this property, it should still be able to generate this amount of
Mhm.
money per month. So that's like a low doc loan, but it's low doc because they can look at the value of the property. They can look at, the comparisons and say, okay, hey, for this home, they should be able to rent this home out for $3,000 a month. So yes, I can give you a loan where the payment is $2,200 a month, because
Mhm.
I can see already that you should still be able to service the debt with the 3,000 that this property can generate. Now, going back to the point about still keeping your personal job, we also have another term. It's called a global debt service ratio. So with the global debt service ratio, debt service is just looking at your business or the property, what the property can generate, what your business can generate. When we look at global, that means what all do you have going on? So think about the globe. It's everything, right? What all do you have going on? So that global ratio gives you the opportunity to either add in another business. You can add in, I mean, it can be Social Security. It can be your W-2 job. It
Mm.
can be your commissions from your real estate sales, because you should have a Schedule C. And all
Mhm.
of that should be reported on your tax return. That's the next thing we need to talk about.
Yeah.
Um, but that's the global. The global can say, okay, hey, maybe right now the business would run a little bit short. But when I look at the historicals of this person having this job, the additional income that would bring to the table may be the thing that will actually put you right over the edge to actually get approved. Okay. So those are the things. DSCR, your debt service ratio. The debt has to be serviced. It's serviced through the cash flow that your business or the property produces. The global looks at everything. You may have 2 or 3 LLCs. You may have 2 or 3 Schedule Cs on your tax returns. You may have a W-2 job. You may be getting alimony, child support. It's lots of different categories that can go in there, but it's something that does need to be consistent, and it's something that you do need to be able to prove in black and white. Okay.
This
But
is
then sometimes I have clients where they Uber. I've had people who are doing startups, but they're Ubering. I have people that are starting companies that are adjacent to what they're doing. So you may be a teacher and you say, okay, I want to start a tutoring company, where you're going to keep your teaching job,
Mhm.
but that teaching job is a W-2 income, but that can roll into you helping to build out whatever you need to do for your tutoring company. So think about layering everything. But the other
Mhm.
thing that it does is it actually takes some of the pressure off of you. You don't want your business to be in survival mode.
That's
That's what
good.
Tabitha Brown was talking about. You're
Mhm.
going to start a business, okay, and then what? Don't put yourself, don't jump out again, this may be a Southern reference. the frying pan, I don't know, from this to the that. Okay. You know what I'm talking about. You have to start again. Really, what this is also forecasting. This is vision. So,
Mhm.
going back to what your friend said, some people are planning for the next 100 years. As a business owner, you have to be looking at least the next 3 to 5 years, even 10 years. Okay, what are the things I can do now to bridge me over, to get to my break even point, to where I can really start seeing the profit? You may have a family. Even if you don't have a family, you still have to take care of yourself. So, how can I still make sure that I can live decently, comfortably, and run my business? Well, again, sometimes having additional income is the only way to do that. It doesn't mean you have to do it forever. It doesn't
Mhm.
mean that what you created is not a great product, but you still have to create some runway so that you can get there.
Awesome. So what do you say to those beautiful Instagram and social media people on TikTok saying you can go get you 50,000. All you need is to go register that LLC. That's all you gotta do. You don't need no documents. You don't need look, we gonna tell you what you need to put on the paper. We'll
That is
tell
true.
you what
Mhm.
to put on the paper to get approved. That's it. What
I
do you
mean,
say to
they're going to
those?
tell you. And you have to understand, like, again, number one, if somebody tells you to get an EIN number and an LLC and go out there and start applying for capital, the only way that that is going to work, not going to say it's completely impossible. The only thing you may be able to get is a business credit card. But that business credit card is going to be based on your personal credit. So that's the missing piece that they're not telling you.
Mhm.
You're not going to get those business credit cards unless you have strong personal credit. So if you have average personal credit, they're not going to really extend you anything. Now, to add to that, if it's a credit card, that means it has a high interest rate. Okay.
Mhm.
We already know that. You may get a low introductory rate for 3 to 6 months or a year, or whatever the case may be. But we know at some point in time that APR will increase. So
Mhm.
why would you take out money with a high APR just because it sounds good? So, and
Mhm.
that's only if you're able to do that. That is what that play is. But that's strongly based on you having, again, strong personal credit, not limited, not average, strong personal credit. What does that mean? That means you really already have to have high limit credit cards on your personal credit
Mhm.
portfolio. If you don't already have a $25,000 personal credit card, trust me, having an EIN number and an LLC and then going to apply to Chase, you're going to get one of those adverse reaction, adverse credit letters in the mail or in your email. So understanding that. So the other thing is that I know I've heard it. The EIN number, this is all that you have to do. No, it is not. You still need a business plan. You still need some direction. Now, back in the day, the business plans used to be super thick. It doesn't
Mhm.
have to be a dissertation, but a lender, an underwriter, their job is totally to assess risk and to limit the risk. The underwriter is almost like the defensive line for a bank.
Mhm.
They're looking to say, okay, hey, we don't need to make that, we don't need to extend credit here because look at the credit portfolio, look at the capacity to repay. So we're going to pass on that. They're trying to defend the bank's assets. The bank is lending you cash, but that cash is their assets. So their job as an underwriter is to defend that. Also, keep in mind that, you know, if you have any type of job, you have a performance review, right? An underwriter's performance review is based on what? How many loans are performing well and how many loans are not. So why am I going to put my personal job on the line when I can't see in black and white that you have the capacity, the character, the five, we've all heard of the 5 C's, but that's what they're looking at, right? So we have to understand that just because you have an EIN number and LLC, you have to demonstrate that you have a plan. Also, even if you're in like a startup or you have a business, they even still want to see your resume. Like, have you
They
been in
will.
this industry before?
And
Are
real
you trying
quick,
to?
I'm
Okay,
sorry, for the 5 C's, for those who don't know what those 5 C's are, can you break those down for me?
credit,
Okay.
capacity, your character, the collateral, and give me 1 second. Let me look because I say them all the time. But I'll tell you this: the collateral is if you're a business owner, it's any of your business assets. No, you may not have. a brick and mortar location. So you may not own your location, but you still have assets. That may be your furniture and fixtures, that may be your accounts receivables, but you should have a balance sheet, and your balance sheet shows your assets. So if you are a business owner, what they can do is they can say, okay, we'll do a UCC filing on all of your business assets. That filing is the collateral to help extend you that credit, meaning that if you don't perform well on the loan, they're going to try to retrieve anything that they can. But keep in mind, even with that, your assets do need, the stronger your assets are, the stronger your loan application is, the better your chances are for getting approval. The capacity is what we talked about earlier. That's that debt service coverage ratio. Does your business, does your plan show or demonstrate that you have the capacity to repay? That's what this game is. Can you pay it back? Are you going
Yeah.
to pay me back? And the only way I know you're going to pay me back is if I look at the numbers and I see that you have the money to pay me back. Okay.
Mhm.
The credit is very important. They're gonna pull, a standard credit report, a TransUnion or an Experian, but also understand they're looking at LexisNexis. So, do you have any judgments? Do you have any
Mhm.
lawsuits against your business? Do you have anything funky out there? Have you been arrested for a violent crime? I mean, it's okay. There's no shade to that, but there are some things that there will be questions about. You may have some of those things going on, but you also need to already be ready to prepare a letter of explanation. Hey, were you 17? You tried to do something crazy. Now you're 40. You're smart. You have a family, XYZ. Things do happen, but we
Mhm.
can't put in an application and then because the application does ask you, have you had this? Have you had that? You're like, nope,
Mhm.
nope, 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 nope. And I'm not going to tell them this. They're not going to figure it out. I can tell you all right now, between LexisNexis and just other algorithms and things that are being created, what they're able to really do is pull in everything that is probably going on in your life that is on public record. Not necessarily, they're not worried about a divorce, but it may be an old bankruptcy. It could have been
Mhm.
something that happened when you were divorced. We can't just, I'm not going to say that they won't figure it out. It was 10 years ago. Yeah, they will. And so understanding that and going into the application process saying, okay, hey, I already, I'm ready to answer these questions when they come up. Because sometimes people are like, why'd you pull that up? I mean, we have to do that because it's looking at your character. So character
Mhm.
and credit are very, very similar, but the character is, again, has your business been sued multiple times? Do
Mhm.
you have a bad reputation in the industry? If I pull up your Google, they're going to listen. Underwriters are pulling up everything. They're going to pull up your Google reviews. They may pull up your Facebook page. They may pull up your business. I'm talking about your business, not necessarily your personal, but they're going to look, okay, what are they saying about you online? Okay, if I go to Better Business Bureau, do you have any complaints? And so understanding that, when you're making money, it's great. Things do happen, but as much as you can keep your slate clean, you must keep your slate clean. And when things do happen, you need to take care of it as soon as possible. And guess what? Sometimes you may have a judgment that was from truly 15 years ago. And it's just maybe some totally random thing. You don't, sometimes there are things that people don't know about. But also, again, we're the CEO of our life, we're the CEO of our business. So it is our job to know what is out there on me. That
Mhm.
is our job. If it is it something that I mean, because sometimes just getting something taken from your record or expunged, you just have to go down there, put your paperwork in, pay the fee, and that's it. But just
Mhm.
thinking that it won't come up or you got out of it, you don't know. And
Right.
so those are some of the things that lenders are looking at. And trust me, good underwriters, they are looking. That's their job. Their job is to poke holes in the application. There's risk to every loan, but the more holes they can poke in the application, the sooner you're going to slide into an adverse action letter, which is a decline. That's why I
Okay.
say it like that. But that's a decline, or maybe a not yet.
Okay.
Yeah.
Now, for me, I am on, I do bonding as well. And for our SBA, it allows people who don't have the best credit of sorts to be able to get opportunities to get the bond that they need to actually do government contracting in some major projects. Does SBA on your side with the lending system, that is your specialty, provide opportunities for people who might not have the best credit and want to be able to get opportunities to actually get funding for their projects.
Yeah, I mean, we license and bonding means that you're trying to be as responsible as you can. So again, it's a statement to your character. It's a statement to you really having a vision for your business. With SBA, the minimum credit score is right around 650. So
Okay.
number one, and honestly, that's going to be the minimum credit score for anything that's decent. Okay.
Okay.
680 is a sweet spot. That's whether you're trying to get a personal mortgage, a personal loan, an SBA loan. 680 and above is a sweet spot. But really 680 to 700, if you can just get there and make sure that you don't have any late payments or if there's anything funky, you've done as much as you can to get it removed, you'll basically be fine. You don't have to have an 800 credit score. And so those are some of the things I also want to demystify because sometimes I have clients, they have a 700 or a 690 or a 680 or maybe they're close to a 680 and they're just so nervous. It's like, well, you have a 670, you have a 675. So you're still within that credit box.
Hmm.
Lenders, all lenders have a credit box. That's really what they're looking at. They have a credit box and then they have a credit matrix. That credit box, you have to get in that box at some capacity. That's minimum credit score, that's DSCR ratios, things of that nature. Then outside of that, you have to make sure again that you can pay. And then also understanding that when you have things going on with SBA lending and most business lending, it's still very much a human touch type of transaction. So I
Hmm.
always tell my clients, really, I'm more of your advocate. I'm really here to work with you. I'm here to work with you. And then I'm also working with my team on the back office. So, number one, when you are working with your lender, be as be as honest as you possibly can. Because if you have a good lender, they'll be able to tell you, okay, we probably don't really need that information, or hey, I can look at your application. This looks like this. I can tell it's going to be some questions here. So let's go ahead and address that on the front end. A good lender is going to preempt you to start addressing some things well before you even submit your application to underwriting. Yes, they're going to collect documents, but they're going to, me personally, I'm going to be doing analysis on the front end because also I like presenting a clean package to my team or as clean as possible. Every deal
Hmm.
is going to have some risk associated with it. And every deal may have some hairs on it. That's what we call it. It's got some hairs on the deal. We need to comb this through, figure it out. But also, as a business owner, you have to be very forthcoming, especially with your lender, your business development person, so that they can know, okay, this is how we can address it. Because yes, there may be some risk, but on the other side of that, you probably have what we call some mitigating factors. So mitigating, almost like if you're a lawyer or you think about law, that mitigation process. That mitigation process is saying, hey, okay, we have some risk here, but look at all the great things that this business has done. This business
Hmm.
has a 20-year history in the community. This person has been in this building for 20 years. They've been in this industry for 40 years. Look, their revenue is still growing year over year. Or, hey, look, they're in this industry. This industry is pretty hot right now. We know that this industry won't be going anywhere. Those are things
Hmm.
that can be leveraged as mitigating factors. And so never be too afraid of the small blemishes because there are some things that can really address that and mitigate it, and then an underwriter can say, okay, there's enough to balance everything out.
Awesome, awesome. Can you tell me the difference between a, I guess, SBA 7A and a 504
Yeah, for
loan?
sure. Absolutely. And that is a great question. So
Hmm.
the SBA 7A, well, I'll start with 504. The 504 is strictly a real estate backed transaction. So it's strictly real estate. Typically, it's a purchase, but it can be a refinance. But it's only real estate. What happens on the 504 loan is that typically you will get a lower rate. The rate will be fixed. But what happens on the 504 is that a bank is also working with a CDC, so a community development corporation. So there are CDCs in every state. There's multiple CDCs in every state. Those CDCs either have government funding or they have state funding. Typically, that funding is at a low cost because it's provided to them for the state or from the state or from the government. So, what does that mean? That means that the CDC, typically what they do is they provide about 40% of the loan. The bank provides 50% of the loan. You as a small business owner, you come with the other 10 because that's your 10% down. That's your skin in the game. The CDC's rate may be 2.5%, maybe 3%. The bank's rate may be 8%, but then you begin to blend that rate and you still have significant cost savings because now the rate is 8%. Here is 2% there. So that blended rate may be 5.5%. It may be 6% versus you having a set rate of 9%. So you're blending the rate, you're having cost savings. Two financial organizations are coming together to meet in the middle for this commercial real estate backed transaction. With 504 loans and with any real estate loan regarding SBA, you as a small business owner, you have to occupy the space at 51%, which is awesome. What does that mean though? Okay, that means that if you purchase a large building, if you purchase a building that has multiple bays, now you have the opportunity, you're a business owner, but you're also a landlord, okay? You can rent some of those spaces out up to 49%. But the SBA still wants to know that, hey, you're at least 51%, meaning that you're the primary owner of the property. Because again, that's that skin in the game. That's that character. That means that, hey, you're not just trying to do something and then, hey, whatever happens, happens. No,
Mhm.
I'm in it at 51% and then I'll manage the other 49%. What I always look at that on the commercial real estate is, when people talk about house hacking, oh, you can leverage an FHA loan or XYZ and you can buy a duplex or you can buy, a quadplex and you can live in one and then you can rent out the other spaces. That's what that opportunity provides you with.
I love that.
So you go from being someone who's paying a landlord to becoming a landlord. Now you're also supplementing your income. And on those transactions, what you would be receiving in rent will be considered in that global.
Global. I was wondering
There we
that.
go. There we
Yeah.
go. It will be considered in that global ratio because we know that you can generate some income from that business or from that commercial real estate purchase. So that's how the 504 works. It's honestly it's a really great lending strategy, and it's not really necessarily hard to get into. You just need to make sure that you have your 10% and that you have that demonstration that you can repay, and of course the minimum credit score. Now, moving on to the 7A. The 7A is like, the umbrella. When Rihanna says you can stand under my umbrella, that is the umbrella of business loans. You can pretty much put anything almost within an SBA loan, I mean a 7A loan. So that means working capital, that can be equipment purchases, that can be adding to your staff. It can also be commercial real estate. It can be a line of credit for a government contract. There are just
Gotcha.
like literally almost any type of capital that you may need can fit under that 7A umbrella. 7A is going to always be a quicker transaction. Now SBA is SBA, but 7A is still typically quicker. Okay.
Okay.
And why is that? Because again, on the 504, you have two banks, they're trying to work together, and it's just a little bit of a longer process. Now with 7A, it can be an easier transaction, but on the flip side to that, the rate is going to be basically the Wall Street Journal prime rate plus probably 2.5%. So what that may look like is if the Wall Street Journal prime rate is 6%, your rate going into it may be 8.5% because the bank is still paying that 6%. We're paying that 6% to leverage the money, right? So then we have to charge a spread. That spread is kind of where we make our money. That spread is typically somewhere between 2 to 2.5%. Sometimes it can be upwards of 3. That's probably if your credit profile is like a little bit shaky, they may charge you like a little bit more for that. But that's the 7A. The 7A, again, it's a wonderful product. You can do multiple things with it. And also with the 7A, the great thing is that you can purchase commercial real estate. You can add some working capital and you can do probably like 5 things in a 7A transaction. Now, with the 504 as well as with the 7A, you can do ground up construction. You can do a commercial real estate purchase. You can do it. You cannot, they're not big fans of refinancing with the 504. It's a little bit tougher, but what you can do is you always can refinance with the 7A. It's just a little bit easier. And maybe somebody may be saying, why is that? Well, that's because the state or the government has allocated that money to the CDC really to help people get into commercial real estate, not necessarily to get a cash out to refinance, if that makes sense. Now, with the
Gotcha.
7A, you can leverage your commercial real estate, you can take out some equity, or you can use your collateral to do other things. Maybe you want to change your space, just several different things. You have a little bit more bandwidth, and there's just much more flexibility in the 7A.
Awesome. So with these loans, what are their like limitations? Is it a certain amount of time that you can apply to them? Is it once your business gets past a certain point, you can't get these loans anymore? And what are the terms like? The length of these terms like?
Yeah, no, that's also a great question. The number one thing that you need for an SBA loan is 2 years tax returns. And so I definitely want to at least take a few minutes here. You need tax returns. So many small business owners, and when I say tax returns, I'm not talking about the tax returns where you're writing everything off. You need 2 years of profitable tax returns. So that means that you're looking at what's going on. You have a CPA or a bookkeeper, and they're leveraging some of the things that can be written off, but they're not just writing off $20,000 in entertainment or $20,000 in travel. Because yes, you can write those things off, and it does reduce your revenue. It will, because many people, when people are writing things off, they're trying to avoid the tax
Taxes.
liability.
Mm-hmm.
They don't want to pay Uncle Sam. Okay, but understand you not wanting to pay a 10,000, it could even be a $20,000 tax bill. It could be 50,000. But when you don't want to pay that, what you sacrifice is the ability to leverage millions of dollars, because now you have negative cash flow that's documented on your tax returns. Or now you've written off too much cash. And again, when we look at that whatever the net amount is what we're using to demonstrate that capacity to repay. Now, we do add in a few things. We add in depreciation. So that's why if you're a business owner, developer, you need to have some assets, because with assets, you can depreciate those things out. It can reduce your tax liability, but depreciation is not really a real thing. It doesn't really come out of your pocket. You're just writing off the usefulness of what you've already purchased. I'm not a CPA, but I'm looking at tax returns and financials all the time. So there are certain things that underwriting can add back into your application. Typically, that's depreciation. It can also be interest expense, because the interest is kind of already accounted for. Even though you have paid it, it's not necessarily a real thing. It is a real thing, but it is something that can be added back in. If you're purchasing commercial real estate and you've previously been renting your location, we can actually add back in all of that rent. So you may have
Mm.
been paying $5,000 a month for this, the property that you're renting for your business. We can add that $60,000 back into the net revenue. So there are certain things that we can add back, but it's very important for you as a business owner to know what those things are. It's also very important for you to be talking to your CPA or bookkeeper and saying, hey, in 2026, I want to try to get approved for an SBA loan. It's called tax strategies. People need to know what you're trying to do. They can't just do the same thing that they did last year if you're trying to purchase. It could be even your personal home. If you're trying to purchase your personal home, FHA, they're going to do all the same things. They're going to look at your tax returns. They're going to look at the tax returns that you send. And then what we're also going to do is we're going to get a transcript from the IRS to just make sure, for good measure, that everything that was reported is accurate. And so understanding, you can write off anything that to your heart's desire. But you not wanting to pay that tax bill can be the difference between you and a $2 million SBA loan. And so that's what we really need to think about in that particular case, is that even $50,000. Because guess what? I'll say this: any debt that you owe the IRS, just put it on a payment plan. Just put it on a
Right.
payment plan. You're not having to pay the $50,000 today. You just put it
Mm-hmm.
on a payment plan. That payment will be added into your ratios. However, you still look financially healthy on paper. So anytime you're getting lending, we're going to need your balance sheet. That's going to show your assets versus your liabilities. We're going to need your profit and loss statement. That's going to really show, okay, what is the cash flow? How is money coming in? What's going out? And what is like your net revenue? the profit and loss is really looking at from January up until now. So we'll say from January until the end of November, this is what my company has done. The profit and loss statement is important because you haven't filed your 2025 taxes just yet. You haven't, because the year isn't over. But we
Mhm.
still need to know that you're keeping up with your revenues, you're keeping up with your payments. We still need to see that document because that's how we know, okay, this is your checkup for right now. This is where you are. The tax returns, again, has to be 2 years, has to be profitable. You typically want it to show year over year growth, incremental growth. Things do happen, industries do change. If there's a dip, again, letter of explanation, and you need to know what that explanation is. No one should have to ask you, why did you make $50,000 less in your business? You should already
Mhm.
know that. Okay. You should already, that is your job to know that. Okay. But you really want to demonstrate when you're trying to get approved for SBA lending or higher loans that year over year growth it's definitely helpful. It's not an absolute must, but it is extremely helpful because if your revenues are going down, underwriting is like, well, okay, what happens if your money goes down again? Will you have
Mhm.
that capacity to repay? Can you service the debt? And so I would say 2 years of strong tax returns, making sure that you have your P&L, that's your profit and loss statement, and your balance sheet. Now, I want to go here with the profit and loss statement. In order to have a profit and loss statement, you have to have some type of accounting software. So what does that mean? That means that as a business owner, I'm being mature enough to get into it. QuickBooks. I mean, it's all kinds out there. So this is like whichever one you want to use, but you can't go into a business just using Venmo or just Stripe or just, you have a payment platform, but you
Mhm.
still need to have some type of accounting software.
Yeah.
Because in that accounting software, you're going to be putting in what is your inventory, what is your cost of goods sold, and it's also going to show you where the trends are in your business. PayPal and Swipe, they may not really show you that, but the
Mhm.
balance sheet and your profit and loss statement is where you can really see where some of the trends are. So it's very, very important that you as a business owner are actually actively looking at those numbers. It's kind of like, you know, looking at your checkbook at the end of the month. Like you have to look at it. I mean, it's
Yeah.
it's no point in not doing that. You have to look at it because you have to know how much money you're managing. So I would always say 2 to 3 years. Definitely the resume, and then also for my small business owners and even entrepreneurs and developers. Also, just having that resume, your personal resume, because that's your character. Again, if you're a developer, it's going to come up at some point in time. Where's your schedule of real estate? Your
Mhm.
schedule of real estate is how many how many fix and flips? What have you bought and held? What have you fixed and flipped? What are the addresses? All of that can be verified, but it's your job to keep that schedule of real estate because guess what? If you haven't done at least a couple of projects, why am I going to lend you $500,000? Unless you have a really
Mhm.
great credit profile. Like you can have a great that can be a substitute on that if you're a developer. But understanding that if you are a developer, that schedule of real estate is very, very important. You want to keep up with that. Now, again, for my small business owners, if you're looking to you still need your personal resume. Okay, I've been in this industry for 20 years. 5 years ago, I broke off. I started doing my own thing. I fully transitioned into my business the last 3 years. Previously, I've had, you could have done a Schedule C on your personal tax return. That's totally fine. But then after your Schedule C, you want to get to the point where you're doing your own actual business tax return. So there are stages. You can do a Schedule C on your personal. It's totally fine. Still don't write everything off. Okay. Then you can get to the point where you're doing your personal tax returns for your LLC. And then when you really mature in business, you'll begin to have that S corp. The S corp means that you're paying yourself, and the S corp has a lot of tax benefits as well. It's a great way to that's a tax strategy, but you kind of have to get your business to a point where it's at a level to really make sure that the S corp is right for you. So I'll say it like that. But there are levels. Typically, if you're just starting off, you may just have that Schedule C. It's going in with your W-2, and you're filing your taxes that way on your 1040. Then from there, you'll do your standard business tax return. As you continue to grow, especially for people who are doing government contracts and they want to be the prime, When you want
Mm-hmm.
to be the prime, you have to get into the S corp status. Other than that, you'll be a subprime on many of the government, which means you can still be making money either way.
Absolutely.
But if you want to be the person who is receiving the money and then directing the money, that's where that S corp will come from. And I've seen personally, I've had clients who have gone from making $600,000 a year, they make 500,000, 600,000. They go back, they look at some things, they start getting their certifications to work with different government entities. They get their S corp status. I've seen for myself somebody go from making $600,000 to like $1.2 million, and then the next year it was $4 million. Why is that? It's paperwork. It's
Mm-hmm.
paperwork. It's algorithm. It's not being afraid, and it's saying, okay, hey, if this is what I need to do to move the needle forward, this is what I'm going to do. But I've seen that in very like real life, and you're looking at the tax return like, okay, 600,000, fine. Oh, 1.2 million, and then the next year is 4 million, and then again, these are especially in government contracting. Once you start getting those contracts and being the prime, it's easier for you to continue to get those contracts.
Mm-hmm.
So you have to set yourself up for success.
Awesome. Awesome. How do we support you in your business, in your dream?
That is a great question. Well, definitely, if you are looking for funding on a real estate transaction or a SBA transaction, small business funding, I want you to reach out to me. Of course, I have my LinkedIn page. My LinkedIn is Ivy Hall. There is a dispensary. So just a disclaimer, even though I have on green, I'm not a dispensary. And it's on LinkedIn. Okay. So when you pull up Ivy Hall, there is a dispensary. That's not me. But you will see me. I think I have on like a yellow blazer. So definitely reach out to me there. But then also, I do have my Instagram. My Instagram is Ivy the Great. I'm always dropping different business tips. I have a series right now. I'm going over all types of business terms, just trying to be like that business professor. Because some business owners, they didn't go to business college. And that's totally fine. They're running their business. But guess what? I went to business college for you at Georgia Tech, an amazing university, one of the top business schools in the nation. And so I have the information to really help you grow and scale. So engaging with me there. And then on there, it also has my website. So I have SBA Sensei. And then I have another website. It's called Fortune and Freedom. With Fortune and Freedom, that's where I'm really talking to women. Because oftentimes women, they're just like me. They may be providers, or maybe again, women aren't getting married at the same rate that they used to. So helping them to understand, if you're not getting married, but you were waiting to get married to buy a house, why not start figuring out, how do you grow your real estate portfolio? How do you start making sure you're investing in stock? How do you make sure that you're preparing for retirement? Because we're not just here to work and pass away. At some point in time, it's going to be time for us to just retire and enjoy life. But in order to do that, you have to have a plan. So those are two of the spaces. You can definitely look me up on Facebook as well. On Facebook, it's Ivy the Great, but it's DE and then Great. So it's Ivy the Great on Facebook. But definitely feel free to reach out to me. I have some digital products on my website. I'll make sure I send you the link to that. And then, like I said, I'm always posting content on Instagram. I'm kind of getting things started on TikTok, but I honestly, I'm a millennial. And so when TikTok just moves so fast, I'm like, wait a
Yeah.
minute.
I was avoiding it for a long time.
But I'm about to step up because, of course, I want to make sure that people are getting the knowledge, and so you just have to kind of go where they're seeking for information. So pretty soon
Absolutely.
you'll start seeing more of my TikTok information as well.
Awesome. Other than getting in contact with you and potentially becoming a client, do you have an ask for your business?
Yeah, I mean, my ask is honestly, if you are a business broker, if you are a real estate broker, if you're in the commercial real estate space, if you're helping people buy and sell businesses, reach out to me. Let's form a relationship. Because guess what? If you're a broker, especially on anything on the business side, I can pay you. Even if it's on the commercial real estate side, there is money, available for strong referrals that do get approved. So we can actually help each other. So again, it's not like, oh, you're not help me help you, as Cuba
Good Cuba.
help me help you, okay, and I'll help you help me, okay. But honestly, it's just when you see this podcast, my biggest ask is that you share it out, because I feel like it was a phenomenal podcast.
Yes.
You're an amazing host. When you see
Oh,
this
thank
podcast
you.
pop up, number one, watch it. Number two, share it out. Whether somebody's a business owner in commercial real estate or just an individual I feel like we touched on everything. So if they're a mom, if they're a parent, if they're possibly getting ready to take care of a parent, we've touched on many things within this podcast. So the biggest ask is that you just share this out. Definitely link up with me on social media. And another ask is that if you do not have life insurance, talk to TaNeshia. Okay. If you have
Mhm.
not purchased a home and you are not a home owner, let's go ahead and start talking to NACA. Let's go ahead and start talking
Mhm.
to a bank. Go ahead and put an application in. Don't, maybe you will get denied. Don't worry about that because the denial will reveal what you need to know to actually get
Do
approved. That's my
absolutely.
ask.
Awesome. You're amazing. I appreciate you.
Thank you, my dear.
Thank you.